concerning just what has happened as a result of the pandemic, where personal loans and debt are concerned, and what that then impacts, or what impact that has had on the economy. You know, I sit here today also really feeling a bit sad because studies estimate that 1.7 million Kenyans have lost their jobs in 2020 as a result of the pandemic. I mean, it was just a few days ago, I saw several banks, two banks actually, announcing that an additional 150, an additional 200, you know, and so on, are being let go of because of the pandemic. And so if you're out there, have been let go of, I want to encourage you, there is hope. So don't lose hope, there is hope. But today we're going to be talking about debt. And so if you're in debt or know somebody who's in debt, please stay tuned. If you know somebody who's in debt and is trying to figure out how to get out of debt, share this video, send it around so that we can continue to have this conversation together and learn together. So I have with me this morning a credit management expert. Yani, he is an expert in knowing how to manage credit for SMEs and for lending institutions as well as individuals. So on the whole spectrum, if you're a borrower, if you're a lender, he's the expert that you want to talk to. His name is Timothy Gathima. Thank you so much for joining us this morning, Timothy.
Thanks, Rina, for having me.
And welcome to the show.
Asante, I'm excited.
Yeah. Karibu sana. So before we go too far, maybe you can tell us a bit about yourself and, you know, your history with what it is that you do.
Okay, so my background basically was in finance. That's what I learned in school. And immediately I left school, I went to work for CRB, as it was known then. And I was working in collections, in the collections department, in Collections Africa. And that was like being thrown straight into the deep end of debt and managing debt from the financial institution's perspective. And I worked there for a number of years, collecting debts from secured, unsecured credit card debt, and seeing this other side of the lending space. And interacting with people who, some people you'd call them up and they'd be like, I don't have any money, do what you want to do to me. We'd call people and they'd be, some other people would insult you on the phone, others would cooperate and, start making payments. And you get to understand how to talk to people, how to deal with the issues that they're facing while sticking, to the subject matter, which is getting people to repay their debts.
Yeah.
And so in a sense, you are a counselor and a guide, because it's in their interest to pay the debts. I remember one of the things that we learned very early on is that 95 to 99% of people take a loan with the intention of paying back. It's only 1% or less who take a loan with the intention of defrauding the lender or the financial institution.
Yeah.
So I worked at CRB, and myself together with a bunch of very entrepreneurial people, we left and started another company. And now this was, we said let's go do this and start collecting debts on our own. Let's see what we can do in this economy. That didn't work quite as we had expected. But in that experience, I got to work with companies like Experian International, companies like Rent Bureau. We did a lot of training around, this was around 2007, 2008, 2009. We went and trained the banks on the new, it was called, it's the credit information sharing law. So we went to all the banks, trained them on the importance of CRBs, train them on the importance of not just having negative data, but having positive data, because that's how the economy can grow in terms of the lending space, where you're not just sharing negative information, where you're sharing negative and positive information, so that the good people are rewarded for being good, and the bad people have a deterrent, so not really a punishment.
And they're not really bad, it's just sometimes it's circumstances.
It's circumstances. And I remember back then we'd talk to the banks and tell them yes, and we're doing a lot of lobbying to have the banks mandated to share both positive and negative information, because Negative information is basically a blacklist, and I know you hear that word being thrown around all the time. You'll be blacklisted. Will blacklist you, and all that does is that it starts locking out people from the borrowing space. And when you think about it, so long as you have managed to borrow a loan, for example, from a bank, it means that you met that strict criteria which they had to lend.
Yeah.
And so when you get locked out, these banks are literally locking out their quote unquote best customers, because something can happen. You can lose a job, you can fall sick. Anything can happen. The economy can take a bit of a wrong turn, like it has with COVID.
Yeah.
And you can fall behind on your payments. But then locking you out completely from the credit space, I think is the wrong way. We're going about this the wrong way. Yeah.
Let's just backtrack a bit. Somebody might be watching this and it's like, okay, what are we talking about? We're talking about credit reference bureaus and debt in general. So credit reference bureaus are organizations collect data. Literally, that's all they do. They're not the enemy. They just collect data from lending institutions about borrowers and everything around borrowers: how long they paid, when they paid, whether they paid on time, how long their loan was, and all this data is then put in one place, which then helps lenders as they review borrowers on a continuous basis. So they're actually quite helpful.
Yes.
And also, let me just mention that I think as a country, we've made huge strides where financial services are concerned. When you look at research that has been done by FST Kenya and the Central Bank of Kenya, we've seen financial inclusion really increase. I mean, from a place where, in 2016, we only had 27% of the population able to access financial services, to today, where you were telling me it's over 80%, perhaps I think 83 or 84% of Kenyans.
Some of the highest in the world.
Some of the highest in the world, which is fantastic. Well, it's awesome that we have access to these financial services. It has also come with access to credit and easy access to credit. I was sharing earlier how every single month, sometimes even twice a month, I get a message from one mobile lender or another that you have access
and telling
to
you this, telling you have this limit.
Yes.
Spend this much. Yes.
Don't stress, it's mid-month and you can access 27,000 or whatever it is. So, which is great. However, some people have borrowed without really needing to borrow, or even knowing why they're borrowing, or borrowing for consumption.
Yeah.
And so that then has landed us into problems.
Yeah.
So I want us to start here. What impact, so we've seen a ballooning of non-performing loans, like a really huge growth of non-performing loans, not just in 2020, but since 2017, your report says. Your survey shows that as at 2019, the non-performing loans were what? What was the number?
So the non-performing loans were at about 12.8% of the total loan book, which is about 360 billion.
360 billion.
Yes.
Is non-performing, meaning people have not paid.
Which means that people haven't paid over a course of 90 days, and therefore now it becomes non-performing. Yes.
What impact does that growth in non-performing loans have on the economy generally?
Okay, so what happens is that the banks have to make provisions for these bad debts. And as they make provisions for the bad debts, it not only impacts their profitability, it also significantly reduces the amount of money which is available to them
for lending. Yeah.
So, and then as it does that, they also have to incur more costs in terms of recovering this money. You have collection costs, you have whole teams of collectors, you have the whole legal teams and all that. And so there's a knock-on effect for in some developed countries. For every $1 in non-performing loans, it's at the $5 that can't be lent out. And in Kenya, we may not have similar ratios in terms of how much money can be lent out, but there's a bank, I don't know if I can mention it, KCB just released their quarter 3 results the day before yesterday.
Yes.
And for the group, the NPLs have grown from 36 billion at this time last year. They're now at 99 billion, which is, it's a huge amount.
Yeah.
The profitability from the third quarter last year has dropped from 19 billion to, right now they're talking about 10 or I think 9 billion. So there's a whole hit of, there's 9-10 billion which they have to which they had to move to provide for, for the growth in NPLs.
In NPLs.
Yes, and that's significant because that's money that could have been, so that's that's dividends to shareholders.
Yes.
That's that's money that they could be lending on, they could be reinvesting, they could be retaining as earnings.
Or even giving for their
exactly.
foundation and doing lots of other things for small enterprises.
Yes. But this additional 60 billion, which is non-performing, this is money that could be coming back in for own lending, because the banks are holding other people's money to lend out to you and I. So they hold your money to lend out to me, and they hold my money to lend out to you, and they charge interest on that, and that's how they make their money. So when I don't pay, then it's your money that I'm holding. So it has a huge impact on the economy.
Okay, so now let's talk about the borrowers, whether the borrowers are businesses or individuals. The fact is that I receive heartbreaking emails from people sharing how I'm on a salary of 40,000 shillings. I have a loan of 600,000, and I don't know where I'm going to pay, because when I pay all my bills, I have only 10,000 left to pay all these loans. I don't know when I'm ever going to finish. I'm in a cycle of debt, continually borrowing. And the frustration I then have when I read some of these emails and try and figure out how we're going to get out of debt is the fact that the cost of this credit is so high. So then it then puts people in a situation where they're not able to save. So it has a ripple effect. And I'm just wondering, what is it? And I mean, what can we do as an economy and as a country to help reduce the cost of debt and the cost of credit generally?
Okay, so there's a renowned economist who's very active on social media, and he talked about, and I agree with him, he talked about the things that we need to do. And I don't know whether we're ready to have this conversation as a nation.
Okay.
But the amount of money that our government borrows domestically, we talk about foreign debt, and we forget to look at the domestic chunk of borrowing. Where
that means the government
borrows money from the banks, from the markets, through bonds, through treasury bills and the like. The amount of money that the government borrows has pushed up the cost of credit to a point where it's really, really expensive. And so for a financial institution looking at zero risk lending to the government, or looking at a risky venture of lending to the public, they'd always choose the government. And so the painful thing that has to happen at some point is that the lending, the rates, the government borrowing rates, if you may, have to come down to really low digits for us to be able to talk about cheap cost, to talk about lowering the cost of credit. Developed countries like in the US, the interest, the rate, the government rate is half of 1%. And so you can get a mortgage at 3%, at 4%. And when that happens, your mortgage repayment is lower than what you'd be paying as rent. So there's a lot of opportunity, but it is tied to fiscal policy. It's tied to how much the government is borrowing money and its appetite for that kind of debt.
Okay.
Yeah, it's a huge.
Okay, so for somebody who is watching this and they're wondering, okay, I'm in debt, whether that debt is a financial institution or an individual or suppliers, because when you're in business, you borrow from different places. Yes. So I'm in debt right now. What can I do? I want to pay back, but my income has been slashed. I've lost my job. My business has reduced by half. Those situations that we all find ourselves in at the moment. What can I do to be able to make sure that I'm not negatively listed or blacklisted, and also be able to survive?
Okay. So let's try and unpack that slowly.
Okay.
It's like a heavy question.
It's a heavy question.
Yes. Okay, so the first thing that you have to do is you have to be completely and brutally honest with yourself.
Okay.
And you have to look at what your sources of income are, and you have to very clearly list down everything that you owe. So you look at how much money is coming in, and this works across for businesses, for individuals. Look at what you're earning. Look at how much you're spending. and look at what you owe. And once you're honest with those three figures is when you can be able to start allocating and knowing this is okay. So let me now just maybe get a bit specific. Let's say you earn 100,000 shillings, you have debts of I don't know how many million, or you earn 50,000 shillings and you have, you know, your debt, what you need to pay for your debts is about maybe 30,000-40,000, which is your entire income.
Yeah.
The issue is that perhaps you're more indebted than you have the ability to pay. And you have to eat, you have to pay rent,
Right.
you have fees. And so having that honest conversation first and saying, this is my income, and knowing this is my expenditure, and so this is the amount that is allocated towards, this is the amount that I can literally afford without starving myself, without getting my kids kicked out of school, without not having bus fare to go to work, for example. And once you've laid everything down, there's a number of things that you can do. One is you can increase your income. It's easier said than done. That's why a lot of people who are employed, when we did the survey, we found that 34% of people who are employed have a side hustle.
Okay, 34%.
Yes, 34%. So it's a good 1/3 of fully employed people. So out of every 3 employees that you have, there's one who has a side hustle. So that's one way you can increase your income. The second is to cut down on your expenditures. So when you are honest with yourself and you look at the things that you're spending money on, are you spending money on, you know, going out? Are you a shopaholic? Do you have more shoes than you need? Are you going on holidays that you can't afford? Are your kids in a school that you can't afford? Are you eating, are you spending 500 bob, 1,000 bob on lunch? Are you going on, that kind of a thing? How much are you spending? And that's now the next bit. And if it's a business, you have to look at brutally and say, what are we spending on that's non-core, that isn't bringing in income that we can cut on? So it might be taking a pay cut as a business owner. It might be laying people off who are non-core. It might be outsourcing some of your activities. It might be moving to a smaller office. It might be
moving home and using your home as your office.
Or using your home as your office, because there's that option now. So you have to, one, look at your income and look at ways of increasing it. Number two, look at your expenditures and look at ways of reducing them.
Right.
And then that gives you a bigger chunk to play around with. And then at that point, you have to start making payments. And the trick is this: make a payment every single month. It doesn't matter if you owe whatever amount of money it is. The way credit bureaus and the way banks work is that they look at you as an individual. They do look at you as an individual, but when it gets to NPLs, they look at the portfolio as a whole. And they say, is this portfolio performing? And so long as the portfolio is performing above a certain amount, then they're happy. And so what that means is, if you're paying back 5% of your debt every month, if you're paying back 3% of your debt every month, 2.5% of your debt every month, you'll be surprised. They'll be happy. Because if the portfolio is performing below, the debt portfolios, they look at it from a global perspective of saying, we have $1 billion and we want to make sure that we get back 2%. So anybody who's paying above that 2%, these are insider secrets, by the way. Anyone who's paying above that percentage every single month without fail.
And so that would be 2% of what? I think I missed that. 2% of
what you owe. So if you're...
So basically, I can actually go... In fact, you would recommend I go back.
Yes.
This is what is recommended anyway, as you have said. You
Yes.
go back and talk to your lender.
Exactly.
And negotiate and say, this is what I can afford
if
to
things
pay.
are really thick, like you're stuck and you don't know what to do, go back, talk to your relationship manager, talk to your bank, talk to the people in the collections departments, talk to the collections manager, talk to whoever needs to be talked to. But more than talking, start making payments. Whether you're able to pay the 2, 5, 10%, 1%, half of 1%, whatever it is. You might owe $1 million, but you'll be surprised. There's a time I was collecting a debt, and the guy owed, I think, 5 million shillings, and he was running a fuel station, and he said, I can't pay
the 100,000 shillings per month that you want me to pay, but I'll start by paying 1,000 shillings every
1,000?
single day. Yes.
Instead of every single day.
Every single day. And at the end of the month, because we used to do our reconciliations at the end of the month, I'd have a booklet of deposit slips. And he started by paying 1,000, and he paid for 3 months. And in the fourth month, he said, I'm going to pay 2,000 bob per day. And after another 3 months, he said, I'm going to pay 3,000 shillings per day. And so now he met, so now my expectation of him was 100,000 per month. And by this, the seventh month, he was paying 90,000 per month. And in less than 2 years, that guy had paid off 5 million shillings.
Wow.
And we were, at that point, when I got the account, we were talking about selling off his fuel station, his assets. And so he did what worked for him. He said, I can't pay you 100,000. At the end of the month, I don't have 100,000. But at the end of the day, I have 1,000 bob. And so that worked for him. And that payment is what got him into a positive, it got that positive action going. And just like saving, debt repayment is the same thing. Once you get into that habit and you build that habit, you'll be very surprised. People think that 2 years is a long time. It's not.
Yeah.
5 years is,
And even for you psychologically, the fact that you're being able to pay, kind of gives you that,
it does,
relief and confidence that you're going to be able to do this and you'll get out of it.
Yeah.
I think for those who might feel, gosh, I don't have that income. I don't have that income, so how am I going to be able to repay because of, you can look at the assets that you have.
Yes.
And sometimes assets can be your watch, it can be shoes, it can be your couch, it can be your, TV, it can be things that you have in your house that you can actually get rid of for now to try and pay off as much as you can, so that you are able to reduce on that principle.
Absolutely.
Yeah.
You just have to start from somewhere.
Start from somewhere.
It might be 100 bob every day.
Yeah.
You'll be surprised how quickly that habit builds up and becomes something positive.
Okay.
Yeah.
Wow. So 2%, if I just pay 2% of what I owe, I can negotiate to that level.
It's, there is, you probably might not be able to negotiate to that level, but the truth of the matter is, if you're paying 2% per month, and you do that religiously for 6 months,
You pay it off.
you'll find yourself after those 6 months having thought of ways of increasing that. And because you're religious in that payment, you're better off than the person who's promising to pay 50% and for the whole year does nothing.
Yeah, true.
Yeah,
True.
yeah. And with that 2%, the bank can actually plan and say, look, we know that X amount is coming in, and so we can project that this will be done by this amount of time. Yeah.
Okay, so let's talk about the credit score.
Yeah.
So you do your credit score, they give you, there's the whole range from really bad all the way to okay, to good, to excellent, right?
Yeah, yeah.
And then you get a score of 100, 200, 300, 700, 800, 900.
Yes.
What do those numbers mean? And how can I increase my score from a 300 to an 800 or to a 600?
Are you sure you want to listen?
It's too much detail?
No. Are you sure you want the answer to this? Okay, so the only way, so the thing is this, the scores are basically based on things like what's your age, what's your gender.
Oh, those matter?
Those, in a sense, matter. Those are some of the small aspects that are taken into account, but the largest thing
I'm curious, just before you move.
Yeah.
So the older you are, the more likely to repay, or what's the rule there?
So, I mean, it's all data-based. And so they know that, for example, people in their 40s are a better credit risk than people in their 20s.
Got it.
So
and
it's,
sex?
I don't know if anyone will ever admit that sex is a factor.
But it is?
But it is.
Uh-huh.
So, men generally get better credit terms than women.
No.
Yes.
But we pay more.
Yes, you do.
We are better payers.
Yes, you are.
If you lend to a woman, she's more likely to pay you back than a man.
Absolutely.
So what is that about?
I don't know. It's men who build these scores. So
that's insane. That is insane.
It just is what it is. For example, I'll give one example. I remember sometime last year, We were, just as a way of, we're just doing research, and we're like, okay. So my wife and I looked at the same mobile loans,
Okay.
these ones that are attached to the same card, and I had, I think, 5 times what she, the kind of money that I could access was 5 times what she could access.
But maybe you had borrowed before, or maybe you had more money in your M-Pesa.
No, absolutely not. We have, I think she had more money going through her M-Pesa
But
than
you could
mine.
borrow 5 times more
I
than
could
she
borrow
could.
5 times more than she could. So there are all those things in the background. But the thing is, if you want to build a credit score, so the things that they use is how good are you at paying. So, which means that you have to borrow either through a credit card,
Okay.
and make your payments on time. You can, you can take a loan and make your payments on time. So the more times you're paying consistently, the better, the better a credit score you get.
So, but we're not encouraging. We're not encouraging you to take loans, but
We're
the
not
way to increase it is
we're not encouraging
to
you to
repay.
take, yes, we're not encouraging you to take loans that you don't need,
Yeah.
and for things which don't bring back money.
Okay, so let's talk about those who have taken on loans, have been unable to repay, and have been blacklisted. Right? So they're already on the list, and it's a negative listing.
Yes.
What steps can they take to improve their credit score and stop being blacklisted? First of all, how long do you have to be blacklisted for?
Okay, so the interesting thing about the law is that it talks about listing for people who have been declared bankrupt, and that's 7 years.
What?
So if you declare bankrupt, so you'll be listed for 7 years. Now, there's a gap in that law, and what it means is that you can have loans from 2006, 2007, and still be listed, so long as you haven't been declared bankrupt. Those loans cannot be collected because the courts have a limit, to the number of years which contracts can legally be enforced, which is, I think, 6 years or 7 years, if I'm not wrong. And so the bank cannot take you to court for debts of 2008, 2009, I think even the year 2010, 2011. If you owed a bank money then, they cannot take you to court now. But if they listed you then, you can still remain listed at the CRB, I think, in perpetuity. So
in perpetuity?
It's a gap in the law. We've tried raising it, we've talked about it. You're better off declaring bankrupt, because in 7 years, you'll be free and clear, then you are not paying back your bank debt, because you remain listed, and you remain listed until the day the bank decides they are not going to list you anymore.
Okay.
Yeah.
So now I'm listed, for example, if
Yes.
I give an example.
Yes.
Let's just say I'm listed. What do I need to do?
You need to pay.
No, and if I can't pay, I've lost my job.
So so that's the danger of blacklisting. The danger of just having a negative listing is that you will have a percentage of the economy that, of people in the economy that cannot make payments, and this will hang over their heads one way or the other, especially where financial decisions are being discussed. But at the end of the day, what we've talked about, and I think what has been talked about on this show a number of times when it comes to debt, is consistent payments. Whether it's the smallest amount, whatever it is, you'll find that time will fly, and in a very short, it might take a long time, but you will end up at a point where you're actually, And I think there's also there's also something that happens when in your mindset, when you start repaying, when you start paying back your loans, you free yourself to being creative, in a sense, to start thinking about ways of making money. If you just sit there and say, you know what, life is so, it does happen, and I'm not judging anybody, but when you just sit there and not do anything positive about it, then you will probably stay stuck there. But if you just start moving, and you just take that one step, and you just start moving to the next and to the next and to the next, you'll find ideas coming to you about how to make money. You'll find in that positivity just solutions to problems which you never thought, which you never could have come across.
Okay.
Yeah.
So maybe you can share with us.
Yeah.
What are the consequences of being listed?
Okay.
Because fine, okay, my list is there, my name is on the list, I'm
Yeah.
blacklisted, but so what?
Mm.
Yeah. What are the consequences?
Okay, so you will not be able to access financial institution loans, for starters.
Okay. And from a SACCO?
There are SACCOs, most SACCOs do not care about
CRB?
about CRBs, and I'm glad that they don't, because SACCOs, I think, are one avenue of growth which can help this economy move, despite all the challenges and all the and all the hurdles that we face when we're dealing with financial institutions, with banks in particular. The beauty about SACCOs, I mean, like we know, is one, they encourage saving, which is excellent. Two, they encourage accountability. So you have to have a common bond with the people who are in the SACCO who are going to guarantee you. And so the risk has been reduced. And so please, for SACCOs, and I'm begging them, continue on this same trajectory. Continue encouraging people to save, continue lending to people, because from the survey we saw that I think 30% of the people have borrowed from SACCOs. So banks had lent to 58% of the borrowers, but the same borrowers have also borrowed from SACCOs. Yeah, and it's an avenue that is helping this economy tick along. When we say that Kenya's economy is very resilient, it's very strong, we're growing, it's a lot has to do with the kind of things that we have here, things like SACCOs, things like the innovation that we have, the resilience of Kenyan people. I think those things are just really tied together.
Okay.
Yeah.
So other than being unable to access credit from a financial institution, what other consequence would there be?
Nothing much else.
But but governments ask the government, and I'm sure governments in the region as well.
Okay. Yeah.
If you want to work for your government,
Yes.
they do
have
ask
yes
for
they do you do need to have a CRB report if you want to work for government, but I don't think that's much of a deterrent, because not so many people want necessarily to work for government, and so it's not that it's not that big a deal, if especially if you're really in financial problems. You're like, what, I don't really
What
care.
about mobile
So
apps?
again, the mobile apps. The mobile apps don't. There's some of them which are concerned about your credit. Your listing, your blacklisting, and those are the ones which are attached to banking institutions. So you have the banks which have mobile apps, on the back end, and those ones actually care about your listing. But then you have the other ones which are quite predatory in their interest rates, and those ones don't care. And that's the thing that happens in an economy where you have negative information only.
Yeah.
Then that space that would have been there for something that is called risk-based pricing, where the people with positive credit get lower rates and the people with negative credit get slightly higher rates, where you don't have reward for good behavior, only punishment for bad behavior, then you have this gray area where all the predators are there lurking, ready to lend to anyone, but the rates at which people are borrowing at, 20% per month, 15% per month, it's crazy. So people will borrow, let's say you have an emergency and you go to a mobile app, you download it, and you get your maybe 4,000 bob, and you're going to pay 5,000. And the only time that money helps you is the first month that you borrow the 4,000, because next month they'll offer you 6,000 or 6,500, but they'll disburse to you 5K. So you'll look for 5,000 to repay, because you're going to borrow, and from then on all you're doing is you get into this interest payment cycle, and all you're doing is just giving them interest every single month. The first month you borrowed 4 and you paid 5. The next month, because you can borrow 5, you look for the 5,000 bob, you repay, and borrow again. So all you've done is paid their interest, and you just continue that cycle. Yeah, you have Shylocks will give you money at 10% per month. It's without positive credit information where good payers are rewarded with lower interest rates and better terms, and all we have is a blacklist, then this is what happens. Is that
all we have? I thought it's actually possible for us to use your positive rating to get better terms.
Not in practice.
Really?
Not in practice. So some financial institutions, of course, insist on seeing your credit report before they lend you money. But, you know, it doesn't get you a better interest rate. It really doesn't. You'll get the exact same rate as, you know, somebody who has no credit history and just has a good job or something of the sort.
Okay.
Yeah.
Interesting.
Yeah.
But that's just here.
That's just here.
All right.
So in developed economies, it's a completely different thing.
Okay, so let's just look at a few of the comments that have come.
Yeah.
I think everyone is sort of in a mood of thinking and reflecting on what you're saying.
Yes.
So Safari Yangu on YouTube says 40K and 600K in loans. How? So it can happen through mobile loans.
Yes.
Then you take a bank loan. Then you borrow from your mechanic. You borrow from different places. That's how it happened.
Yeah.
And then for Colin's his comment is half of the 1% of the total owed. I'm not sure what that related to, but I think it's when you were talking about how...
When I was talking about repayments. Okay, look, if you owe 1 million shillings and you probably borrowed at, let's say, 14-15% over 3 years, your repayment should have been 36,000, thereabout, slightly below 40,000. And now you lost your job, you're unable to pay, and you have 1 million shillings outstanding. So it's better to pay 5,000 shillings every single month, which is half of 1%, than it is to pay nothing.
Yes.
You know, and build up from that 5K every month. You'll find at some point you're paying 6, maybe you're paying 10, and your aim always should be to get back to as close to your original loan repayment amount as possible.
Yeah.
Because then that gives the bank confidence, or the lending institution confidence, that you are able to, you've gotten back to where you were before, and now you're good for credit. You know, you're good to be lent to again.
Okay.
Yeah.
Great. And then we have Ivy. Thank you for watching. She's watching on Facebook, and she says, what are the sources that one can use to access or obtain their credit rating?
Okay, so you have the credit bureaus, and
so maybe you can say the names of the three that we have in Kenya. So that
okay, so we have TransUnion, we have Metropole. The third name always escapes me.
Was it Info? Credit Info or something?
Credit Info. I think it's Credit Info. Yes. So what happens with the credit bureaus is that they have the negative listing, and that's as per the law. And what they've done is gone a step further, and because the banks share the information with them, they're mandated to share the negative information, but they also share the negative and the positive information. And so from your repayment information, the credit bureau is able to build a score on you as an individual, and says that, Rina, you are a positive payer. We've seen you making payments, and therefore we can ascribe this score. And this score looks at many different data points and says to anybody who's looking, instead of having to try and figure out whether you're going to pay back your debts or not, the score immediately tells them, okay, if you have a score above this amount of money, there's someone who's crunched the numbers, and these numbers tell me that you're good for credit. So that's in very simple terms, that's what a credit score is.
Yeah.
Yeah.
So Ivy, what you can do, or anybody who's curious what their score is, you actually get one free credit score report per year for free.
Yes.
Well, they say it's for free, but from experience, there's one of those three who charge, and they charge 100 shillings. But the other two are free. So you just go on their website, check. You can use an USSD code for some of them, whatever hash, and then they email you your report. So for one of them, it's just 100 shillings. The others, it's actually absolutely free for the first report that you get in the month. I'd encourage people, get your credit score, get your report, see what's happening, and see where you can
see what gaps there are, and you might have loans in your name that you have
You didn't even
no
know
idea
about.
Yes.
Actually, I remember seeing that Twitter conversation.
Yeah.
I think it was last year.
Mm-hmm.
And this individual was complaining that they got blacklisted by one of the CRB companies because of taking a mobile loan, and they had never taken a mobile loan.
Yeah.
It was an issue of identity theft, where somebody had used their ID, bought a phone and registered with their ID, and borrowed money from a mobile app. So for somebody like that,
Yes.
what would they do?
Okay, so the law gives you a way of clearing your name with the CRBs. So if you do notice, and that's why it's important to see what's happening with this information that's out there in your name. When you get your report, go through it, have a look at what's been, what's listed there about you. You might have loans which you may have forgotten about. You may have, a lot of people have, people set up companies, for example, with their friends, and this is actually a challenge. You set up a company with people 10 years ago. You left, you're no longer working with those people, you're a director or a shareholder, and they have borrowed money, and that company has a negative listing, and therefore you as a director would have a negative listing.
Oh, wait a minute.
Yes.
You're saying if I'm a shareholder of a company,
Yes.
maybe I own 2% shares in that company,
Mm.
that company is negatively listed.
Yeah.
Is it as a shareholder or as a director on the board?
As a director.
As a director on the board.
Yes. So if you're listed as if you're known as a director in a company, and that company has borrowed and is not repaying or is not meeting its obligations, then you will have you will be listed alongside that company as a director.
Yeah.
Yeah. So it's that's why you need your report. There's someone I know who was who was listed with it's a company, family company. It has loans, and it's been paying pretty well. And when he went to get a facility, he was told, wait, you're a director in this company. It's like, yeah, but it's a family company, and the debts are being repaid. They're like, no, we can't lend you money because in this month they paid a week late, and in this other month they paid a month late, and so you're listed, and so we can't give you that facility. So it's real. It's and that's the danger of blacklisting, is that you only look. Can you imagine if someone only judged you for the negative things you've done? And that's what the blacklist is. It's saying, Rina, when you were 19, you got home late, and so we can't trust you. We can't trust that you keep time.
Yeah.
Without looking at how much growth you've had. They can't.
Is that how it works in other markets?
No, that's not how it works, because CRBs are supposed to provide rich data that helps people make lending decisions, and so it's supposed to have a holistic picture.
Yeah.
And that's the danger with blacklisting, is that it only looks at the negative.
The negative.
And so it doesn't matter that you have positives, like for example, in more developed countries like in the US, they even look at how well you pay your rent. And so you have individuals who you're up to date on your rent, that goes towards your credit score. You pay your utility bills on time, that goes towards your credit score.
So I saw somewhere that even in Kenya, they're looking at getting people like Kenya Power, insurance companies, also giving information or data to the credit rating bureaus. Has that already begun?
On a voluntary basis, yes.
What does that mean?
It means that for the institutions which want to share positive information can share on it's a voluntary basis, but it's not the law. And I think in Kenya, for something to actually happen, I think it has to be backed by the law. And so I remember 11, 12 years ago, we were fighting for positive information to be included in the CRB law.
Yeah, so that the scoring is fair.
So that the scoring it's holistic.
Yes.
It's there's a lot, when there's a lot more positive data, then you're able to grow, because then what would happen is you now move to the stage where you say, we are going to do risk-based pricing, where you come in with a very good credit score, and you can walk into an insurance company and walk out with the insurance sticker, because they know it doesn't matter whether you pay a down payment or not, you're good for your credit, and you cherish this score so much that it's important for you to make your payments. You will get, you start a business.
Yeah.
You'll be able to get an office without having to pay a deposit because you have a positive score, because your landlord knows this person has had 10 years of positive data. And so it encourages more people to make more payments. And that's the thing. When you share, when there's positive data being shared, then it has the economy is able to grow, because there is not just a stick of the blacklist, but there's also a carrot encouraging people to be good payers.
Yeah.
But when you only have punishment, and then people are like, you know what, I've been listed so many times, I don't care. Then you lose that stick, the blacklist loses its.
And everybody loses.
Yeah.
The financial institutions, the lenders lose,
Exactly.
the borrowers lose,
Exactly.
the economy, the government loses.
And the economy loses,
Yeah.
because then there's, the incidence of, the good people are no longer encouraged to be good. So you're like, there's no benefit whatsoever. At some point we used to have no claims bonuses for insurance companies.
Yes.
You remember when you'd get a lower rate because you've not made a claim, but now it doesn't matter. So it doesn't matter whether I make a claim or not.
However, it's actually, that's a differentiator that an insurance company can use as a unique selling proposition
Yes.
to get more
Yes.
clients to come in. If there's an insurer who says, you know
Yes.
what, I'm going to insure based on how you are claiming, and so the cost of your insurance will be based on that. I think that's something that they can use.
And
Yeah, there's a couple of more questions. So Ronnie, thank you for watching. Says, can I pay for a credit score? How much does it cost? I think we covered that.
Yeah.
It's free of charge.
Yes.
However,
For your
there's-
first
For
one.
your first one.
Yes.
Well, per year.
Per year.
Per year, it's
Yes,
free.
yes.
However, I did mention that one of them charges, Metropole charges 100 shillings. TransUnion and Credit Info don't charge. It's free of charge. And then Wambua asks, which of those two are free? Yes, so Metropole and
Credit Info.
and Credit Info
Yes.
are free.
Yeah.
There's another question I wanted to ask that I saw on the survey that you did that I thought was really interesting. So you had this graph that showed number of people who had borrowed, where they borrowed from, but then on the other end there was borrowing, and on the other end there was lending.
Yes.
There was lending. So where you have people borrowing from institutions, and there's also people who are lending to other individuals. And I found that very interesting, that people are lending even $1 million,
Yes.
over $1 million.
There's 10 million. The people
Even
who've
10
lent
million.
even over 10 million, yes.
I was so shocked.
Yes.
I'm like, okay, so this is interesting. As individuals, we're actually lending to other individuals, whether those other individuals are family members or close friends.
Yeah.
So I have very strong opinions where this is concerned, but I just wanted to hear your views.
Yes.
Is that a good thing or is it a bad thing? It's very interesting.
It's a really good thing. I think it's a really good thing. And the reason is this. So when you're lending to very close friends or family, the rule I'd say is lend money which you're willing to lose.
Okay.
When you're lending to very close friends and very close family. And again, even the Bible talks about, if I will paraphrase that, you can't call yourself a righteous man if your family is hungry. And so I think if you even look at it from that perspective, you cannot, when it's close friends and family and you're helping them out, do it in a way that, it's roho safi. This is, I don't expect anything back. Do it in that way, in that perspective. But how much money do we spend buying pieces of land all over the country, for example? And that money properly channeled, for example, into a small company that's starting, can actually have a really massive impact. So I encourage people to lend to businesses, lend to people with ideas, but interrogate those ideas. Have a look at them. Talk to a professional about them. Do you understand, for example, the kind of financial, I'll use the word financial model. I hope I don't lose people. But do you understand how this business makes money? Yeah, and how that money, and how, do you understand how they're making the money and how sustainable that money is? And if the answer to that is yes, yes, and yes, then by all means, take the risk. I mean, it's a risk, but take the risk, and it should be a calculated risk. you should have first of all, full understanding about the kind of relationship you're getting into. Secondly, you should have contracts. Thirdly, talk to a professional before you lend out money. But I think it's a good thing.
Lastly, the first point you said, be willing to lose. So it's really you're giving.
Yeah,
and if you get it back, it's a bonus.
Absolutely.
Yeah, but
Absolutely.
it's very interesting. A lot of people are lending, which means people do have alternatives from financial institutions
Yes.
that they can borrow from at
Yes.
rates that are friendly.
Yes. Yes.
Okay.
Yeah. So there are those alternatives.
Yeah.
There's friends and family. There's SACCOs. There's
Okay.
Yeah.
Somebody is asking from Facebook, Mbaira, thank you for watching. How long is, I think they're talking about the credit rating certificate, or that rating that you get. How long is it valid for?
I think it's valid for a year, and until you have financial activity, whether you applied for a loan.
Yeah.
Because when you apply for a loan, the person you're applying from makes an inquiry to the CRBs, and that inquiry is logged into your credit report.
Okay.
And so a negative thing that can be viewed on a credit report is having many loan applications, because it means that you're having many rejections, and that's not a good thing.
Oh.
Yes. So, going to this bank this month, and then this other bank next month. By the time you go to the third bank, they'll be aware that you've gone to two other banks to try and borrow money. And so until there's a financial activity in that sense on your report should remain valid for that year.
Yeah.
Yeah.
Okay. Great. So I don't think there's any further questions from guys who are watching us right now. And thank you so much for watching. Thank you for just the questions and the interaction. It's much appreciated. Subscribe so that then you get informed when we have additional shows and content. I think I just want us to summarize what we've said in terms of debt and credit reference bureaus. Well, it's a pain. Yes, we've seen that it's such a negative. They take on such a negative perspective.
Yeah.
But it's also helpful for financial institutions to be able to evaluate whether or not to lend. And while we are still growing as an economy, and also as a sector in trying to find ways to use this information well, as an individual, how, in summary, should I manage this part of my personal finances, so that I ensure that when I want a loan or need a loan, I'm able to access it, and that I don't get listed. If you could just give a summary around that and around debt as well.
Okay, so the thing is, and this applies for almost 100% of everybody, when you're taking a loan, you intend to make payment. You take this money for a specific thing that you want to do, and you intend to make payment. So and that intention should be carried through even when things don't go as planned. And the point is, make your loan repayments. It might not be the amount that was agreed upon, but at the end of the day, every single month, if there is a steady amount coming in, then the lender can also plan based on that. And that's, I think, for the lender, the peace of mind is knowing that I'll be able to get X amount from so-and-so, whether it's an individual who's lent you money, whether it's an institution. They want to know.
In that situation, I'm sorry, I have a question there.
Yeah.
When it's a mobile lending app, where the repayment period is so short, 30 days, 60 days, how do you deal with that? Because I've found with majority of people, because they're not able to make the payments that are required, they sort of just leave it alone and they forget about it.
So, actually, I have a whole thing about mobile lending apps. So for mobile lending apps, I think unless you're in extreme dire emergency situations, and I know that happens, then avoid them because they're so expensive. You can have, if you have 30,000, 40,000 in mobile lending apps, you're paying 10,000 a month on interest alone. And getting out of that mobile lending app cycle will free up so much of your cash. Because, if you talk about 20% interest per month, that's just crazy. So
20?
Yes.
Is it that high? I thought it was 7, 8%.
No, absolutely not.
Per month?
Per month. If you borrow 4,000, you're paying back 5,000. That's
So in total, you pay 9,000.
no. If you borrow 4,000 bob,
Like, for example, so what happens?
Okay, so you pay 1,000 for the
you
4,000.
pay 1,000 shillings in so
Yeah.
it's as high as 24%.
Very high. It's
20%.
very high.
It's crazy high. And so when you look at
it over the whole year, you'll have paid so much money back. So I'd say if you have mobile app debt, I'd tell you as early as possible, get out of it. That should be your priority. Get out of the most expensive debt. Move from the mobile debt. Go to your bank loans. Those are also very high. Then pay off your SACCOs, and if possible, after having discussed with your friends and family, then those are the last people who you should be paying. If you have across the entire spectrum of debt. Yeah. And then again, you should look at, when you're borrowing, you should look at it the other way around. Start with the cheapest debt and move towards the most expensive. Yeah.
Which is what you've said. Don't borrow from mobile apps unless it's an emergency.
This is
no other alternative.
it's that you can't ignore facts, and people are borrowing from these apps. But if you can avoid it, please just really avoid borrowing from mobile apps. Yeah.
Thank you so much. It's been really informative and helpful.
Yeah.
Really grateful for the opportunity to have had this conversation. Debt is always that big thing that happens, and we always have it hanging over our heads. It's very stressful.
Yeah.
And can cause a significant amount of anxiety. But there's help, guys. There's help out there. If anybody is out here looking for help to manage their debt as an institution, whether as a lender or a borrower, how do they get in touch with you? Okay,
so my company, Collect Pro, is located at the Sandbox. We are at CMS Plaza. This is near IIA Center. The Sandbox is basically a collection of about 25 companies which have come together to provide solutions for companies and individuals of all sizes. And Collect Pro specifically, we work with individuals, we work with SMEs, and we work with large institutions. So we've partnered with one of the largest software providers for debt collection solutions. That's based in the UK, and we're focusing on bringing that as a way of helping banks, helping the SACCOs to be able to properly manage their debt.
Okay.
Yeah, and with the kind of experts that we have within the company, and we're collaborating with, I think in as much as things might look like they're getting out of hand right now, there are solutions out there, and I think we can actually work and do something about this economy, because I think we have so much potential. Kenyans are so resilient, and we're so hardworking, and we're so intelligent. And one of the areas which we can grow and really blow this economy out of the water is if we had access to good credit, and we had access to information, and we had systems which are working for us. And that's really what we're here to do.
Okay. In case you have any questions, please share with us. Our email address is sema@moneywise.co.ke, and our phone number is on the screen. I need to cram this number so that I have it off head, but the team is going to put it on the screen so that then you can ask any questions that you may have through WhatsApp. We also have a book, and I have a section actually on the book where we've covered debt repayment, on what are the steps I should take where I want to get out of debt, and just the ABCs of being able to do that. So get yourself a copy. It's just 1,000 shillings, and you can WhatsApp us or give us a call, and we'll be able to get one sent to you wherever it is that you are. So thank you so much for watching. Whatever your situation today, don't be discouraged. Just know that there's always a way out. So remain hopeful, and you will find a way out. God bless you, and have a fantastic day and a great weekend ahead. Take care.